Hello and welcome to Business 360. I'm Shireen Bhan. The big stories that we're tracking for you this evening. The market ends flat for the week following a range-bound session on Friday. The sensex and the nifty regained last week's losses. Both indices up over 1%. All sectoral indices record gains this week, except for the IT index. Finance Minister Nirmala Sitharaman speaks exclusively to Network 18 days after the Council approved the big GST Bonanza, says 100% the needle will move on consumption after the rate cuts, clarifies that petroleum and alcohol will stay out of the GST in the near future, adds the government will adhere to its capex plan and its fiscal glide path. Finance Minister says India is open to relaxing stringent rules imposed on Chinese investment, but also calls for a meaningful dialogue with China on improving market access for Indian companies. Says a lot of work needs to be done when it comes to trade and business ties. Captains of India Inc. welcomed the GST rate cut. Britannia's CEO says the reform should foster a demand-driven environment, as the company will figure out how the rollout will increase grammages as soon as possible. Titan's CEO says the rate cuts will increase money in the hands of the customer. Bata's MD says the GST cuts were timed perfectly ahead of the festive season. The Electronics and IT Secretary S. Krishnan expects a consumption spike in white goods on the back of the GST rate cuts, forecasts a spillover effect in downstream industries, says he expects the industry to repay government's trust by transmitting cuts. That's an exclusive. Top private life insurer expects minimal impact on their embedded value after the GST Council exempts insurance premium from GST. HDFC Life, SBI Life and ICICI Pru forecast an impact of less than 1%. President Trump hosts tech CEOs at the White House. Meta founder Zuckerberg, Microsoft founder Bill Gates, Alphabet CEO Sundar Pichai and OpenAI founder Sam Altman in attendance. Trump calls them a high IQ group leading a revolution in business, vows to impose tariffs on semicon companies not shifting production to the US. Israel claims it's captured 40% of Gaza City, says it plans to expand operations further. At least 44 Palestinians killed in Gaza in the last 24 hours. The Hamas-led health ministry claims children account for 30% of deaths since the war began in 2023. Well, the day's market action to start with, as always, the Indian market closing the day flat after a range-bound session. The Nifty did hold on to 24,700. Auto stocks saw gains continuing, while IT stocks were down in the red today. For the week, let's bring up the Nifty and the Sensex for you, up by about 1% apiece, and the mid-cap index higher by about 2.5%, so recouping the previous week's losses. That's where the markets have closed for the week. Now, let's go across to Prashant. He joins us to wrap up the market action for us. Prashant, it's been a big week on account of all the announcements that have come in on the GST. How are we set up now for trade for the next one?
Still digesting the GST announcements, Shireen. The week Friday to Friday, basically we were up, but it didn't feel like it was a big one just in terms of the price action, right? Individual sectors, individual stocks, of course, there are sharp rallies, etc. But on a headline level, it'll come up on your screen. The Nifty 1%, the Nifty Bank about 0.8, mid-cap index ending about 2.25% higher, small-cap index about 2.5% in the green as well. Sectorally, there were pockets of strength. So metal index was up about 5.5%, the auto index 5% plus, capital market index up 4.5%, and the consumer index was up about 3.5% as well. So this was basically a continuation of the move, especially in sectors like auto, consumer, etc., which started when the Prime Minister on the 15th of August made announcements, made the promise that GST rationalization will happen. So coming into the GST actual announcements, these rallied happened. Post-GST, the actual announcement, as it so often happens in markets, a bit of sell, buy the rumor, sell the news kind of happened. Not exactly sell the news, but there was, of course, as you put it, I think it is more digesting the gains which had already come through. IT was the only large sectoral index which was down on a weekly basis with about a 1% cut. You look at the big winners this week, stock-specific, Mahindra, really top of the list on the Nifty, at least 11%. Tata Steel, Eicher, Bajaj Finance, between 7 and 8% across the board. The cuts coming through largely in IT services. HCL Tech down 2.5%, Wipro, Infosys down about 2% a piece as well. And of course, there are sharp rallies. There always are. Single stocks, NetWeb 34% this week. GMDC 26%, TBO Tech, Bata India, of course, it's a big footwear as a category is a big winner. And we, by the way, had the management of Bata with us on Friday. Keynes, Samman Capital, CNBC story confirmed with regards to top leadership change. BSE was up 11% and Ola was up 11%, even though on Friday it sold off about 7-8%. Cuts, of course, will also come up. Honeywell, Intellect, Vari, but nothing really very large. As you said, what next? There is a lot which is stacked up, lots of moving parts as far as markets go. And it's been more local with GST, but I think the attention once again starts to shift on US Trump tariffs and, of course, the response to those Trump tariffs. So 8th of September, you've got the virtual meeting of the BRICS leaders who will discuss the response to Trump's tariffs, trade policy. There is the FOMC meeting on the 17th of September, so not the coming week, but the week after, where rate cuts are expected. And, of course, the festive season kicks off later on the 22nd of September when these GST cuts also come into effect. So I think, you know, markets will wait and watch for the kind of response that one sees. Remember, Shireen, across sectors, you know, when you get on the 1st of October, when you get monthly sales data for September, it's going to be largely a washout because, you know, companies report out of factory numbers and, you know, there is enough inventory piled up across lots of sectors. So it's unlikely dealers would buy more in the month of September. So I think that is something which in the very near term, markets are cognizant of as well. Back to you.
Well, many thanks, Prashant. And speaking of President Trump, he's tweeting already or truth socialing already. He's posted a picture of Prime Minister Modi, President Xi Jinping and President Putin. And he says, looks like we've lost India and Russia to the deepest, darkest China. May they have a long, prosperous future together, signed President Donald J. Trump. So that's the latest missive there from President Trump. But let's go straight to the big newsmaker of the day. Finance Minister Nirmala Sitharaman speaking exclusively to Network 18's editor-in-chief Rahul Joshi. Days after the GST Council approved the mega GST rate cuts, the Finance Minister said she was absolutely confident that the needle will move, in her words, 100% on consumption after the GST cuts. Clarified that petroleum and alcohol will stay out of the GST in the near future. Remember, they were not part of the centre's proposal. Also added that the government will adhere to its capex plan and its fiscal glide path. She said, my fiscal math is absolutely fine. She also said that India was open to relaxing rules imposed on Chinese investments, but has also called for a meaningful dialogue with China on improving market access for Indian companies. Also importantly, the finance minister saying that the government is working on a package for exporters. Remember, exporters have been hit with that 50% tariff by the Trump administration. And the finance minister said very clearly, we cannot leave our exporters high and dry.
You know, you've put more money into the hands of the consumer. You know, you brought down for the middle classes, the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut.
Right.
The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. Okay. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, right, which popular parlance says sin goods.
Yeah.
So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments. It will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah. Have you seen that in the past?
At least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path.
Right.
I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have
and
to.
And you don't see that happening in the near future?
Not in the immediate future.
And you can catch that entire conversation with Finance Minister Nirmala Sitharaman at 5 p.m. and 9:30 p.m. right here on CNBC-TV18. Well, the government is working towards finalising a special package for MSMEs to soften the tariff blow. Remember, you just heard there from the Finance Minister that the government was working on putting a package together to alleviate the pain that exporters are facing. Shivani is standing by with more details on what the likely MSME package could look like. What are you picking up from your sources, Shivani?
Well, yes, the government is drafting what sources describe as a comprehensive mega package for MSMEs, specifically the small and medium exporters, who are collectively facing losses of approximately 45 to 80 billion US dollars due to 50% US tariffs. At the heart of the blueprint could be 5 new schemes modeled on the COVID-era credit guarantee programs, but tailored, of course, to the current challenges. The schemes will be designed to provide easy access to working capital so exporters don't run into liquidity crunches. Second, they're also thinking of expanding the collateral-free loan limit to 20 lakh rupees from the current 10 lakh, easing credit flow for smallest enterprises, offer targeted interest subventions to bring down lending costs, unlock equity financing is also one of the plans that is being discussed, allowing firms to raise growth capital without adding to debt, and introducing sector-specific support windows for the most vulnerable industries, which is the textile, apparel, gems and jewelry, leather, engineering goods and agri-marine exports. On top of this, the government is also weighing indirect tax reliefs from recent GST cuts to faster, smoother ITC refunds, which could immediately free up cash for MSMEs. The broader goal is to ease working capital stress, protect jobs and buy exporters crucial time as they search for new markets. In fact, many exporters are already experimenting with nearshoring through Bhutan and Nepal while diversifying shipments to other destinations. Now, the message here is very clear. The centre wants to shield India's employment-intensive export backbone from the external shock and ensure the sector continues to power growth despite global headwinds. Back to you.
Many thanks, Shivani. And you can catch our special coverage on the GST rate cuts, where India Inc. will quiz top policymakers. That's coming up for you at 4:30 p.m. right here on CNBC-TV18, the GST helpline. Stay tuned for that. Up next, Electronics and IT Secretary S. Krishnan expects a consumption spike in white goods on the back of the GST rate cuts, forecasts a spillover effect in downstream industries. An exclusive conversation when we return.
Hello and welcome to this special broadcast right here on CNBC-TV18. The last few hours, we've seen dramatic landscape developments. On one hand, we've seen sweeping changes that have been announced to the GST rate structure. GST Council making a unanimous decision for rationalization of GST rates across various product categories and services. Also, very many products as far as the electronics industry is concerned. But that's only one side of the story. The other side, of course, we've seen 3 days of hectic action at Yashobhoomi in New Delhi on the issue of Semicon India 2025. We've seen big announcements coming in from the Prime Minister, from the Ministry of Electronics and IT. To tell us about all of these issues and a lot more, I have with me Secretary Krishnan. Mr. Krishnan, thank you so much for joining us.
Thank you for having me.
For being a part of this conversation. Let me begin by asking the latest decision that we've heard from the GST Council. Late last evening, we had the Finance Minister announce that there's a new rate structure in place, 2 slabs only, 5 and 18% with a 40% caveat for certain exclusive products, sin products, luxury goods. Amongst the rate rationalization we've seen, very many products fall under your ministry, whether that's air conditioners, televisions, dishwashers, photovoltaic cells. What's equally important is that 22nd September is when they're kicking in. I just want to get a sense, what is your expectation, what is your assessment of the impact this will have, consumption stepping in just ahead of the festive season?
I think there are 2 or 3 things which are important here. The first and most important thing from an industry perspective is that a rate simplification in GST and reducing the number of effective rates is a huge ease of doing business improvement. Sure. It ensures that problems of classification, other issues that companies typically have are reduced considerably. Sure. So I think from that perspective, this is a very forward-looking, much-needed reform, and I think it's a very significant reform. Now, it also so happens that when you've eliminated the 28% rate and you've brought it down substantially by 10% to just 18%, a large number of goods, particularly in the electronics sector, fall within that category. In addition, a large number of white goods and other goods of mass consumption which use various electronics parts as inputs also fall within that categorization. It should, as you pointed out, coming as it does just on the eve of the festive season, certainly help consumption and lift the spirits in terms of consumption. And it plays on the idea that India is a big market and Indian consumption itself can contribute significantly to the growth momentum in India. So, and for the electronic sector, that is important as overall volumes of consumption increase, as more gets consumed, and downstream all the players in the industry clearly will get benefited. So I think that's a big plus.
One of the questions that we had been asking on what the fiscal impact is likely to be, the response that the Finance Ministry appears to be giving is that there is a consumption effect that will take place through the rest of the fiscal. What is the kind of consumption-led boost that you're expecting in terms of some of these products that we're talking about that will offset any fiscal impact?
No, you're pushing me back to older memories, but typically in all of this, it follows something called a J-curve. So you might have a fiscal impact which is immediate, but I think it will pick up in due course and go up fairly quickly. And clearly, I mean, a decision of this kind would be taken with an eye on the fiscal impact. But in the long run, I think every such reform actually only pushes the growth momentum forward. I think experience has shown us that.
One interesting caveat is that no anti-profiteering provision this time. Is there confidence? Have you had conversations with the industry in terms of transmission of these lower rates?
We have been informing industry and we have been in touch with industry about these measures, and we expect that industry will repay the trust which has been reposed in them by ensuring that they pass on these benefits to consumers, because that's the only way that they will see enhanced demand.
Sure. One final question on the issue of GST. Smartphones. An industry-led demand was that we should have 18% go down to 5%. That's not happened, and that's come at a time when the demand for smartphones domestically has been sluggish. Is there room for making a case for lowering?
I mean, it depends. I don't want to go into a case-by-case issue of which goods should be at 18 and which goods should be at one particular percentage. There are always going to be 2 sets of views on something like this. There's a balance which has to be struck. Clearly, you know, when you're rationalizing the rates, not everything will come down. And not everything will come down to the extent to which you want it to come down. So I think it is all right. I mean, it is something which, and as far as India's demand is concerned, I think we are actually talking about a saturated market, or near saturated domestic market for mobile phones. Annually, in the last 3 years, it's been a little north of 300 million units, about 30 crore units being sold every year. Yes. Now, there is a replacement cycle and the population has been covered, so you can't expect that kind of growth now from the domestic market as you did in the past. Sure. So the future markets that we need to be looking at are really export markets in this space. Sure,
sir. Let's also talk about Semicon India 2025. a stellar gathering of leaders from across the world. What, to your mind, were the biggest takeaways that you walk away with from Semicon India 2025?
I think the biggest clear and biggest takeaway is the enhanced level of confidence that the world has in the way that India has approached the semiconductor push in this round. And the fact that between last year's conference and this year's conference itself, they can see so much on ground that has actually been achieved in terms of the number of companies that have been approved, in the way the work has gone on, and the fact that the first Indian chips are already out, commercially produced Indian chips are already out. So I think the impression that people have gone away is that we have walked the talk literally in this space. And as a result, the possibility of further investments and further momentum to the sector is clear. But let me make myself clear that I think India is a long way from being a major semiconductor player still. There is a way to go before we get there. That is the vision. And the Prime Minister himself pointed out clearly that there will be a long-term commitment to this sector to make sure that we achieve that vision. So there is, we have to put our heads down and continue to do that work to make sure that the Prime Minister's vision is realized.